It's 5 o'clock. Ladies and gentlemen, dear friends, good morning and good afternoon. Welcome to our monthly webinar. Today, we are delighted, privileged, and honored to have David Rubenstein as our guest. I probably need a full hour to properly introduce David and his accomplishments, but I will do my very best within my time limit. After a legal career with a prominent New York law firm, David entered public service and worked in the White House as Deputy Domestic Policy Advisor to President Carter. By his own admission, he was instrumental for running up the inflation to double digits, and quickly realizing his limited upside in politics, David then answered God's highest calling and entered the private equity world. In 1987, he co-founded Carlyle with $5 million capital. Today, Carlyle is a highly successful and respected global investment firm, managing over $260 billion in 29 offices worldwide. During his spare time, he shares his wisdom and experience with some of the leading and most prestigious organizations in America. Last count, more than 15. David's past and present affiliation as chairperson or director with such organizations include World Economic Forum, Brookings Institute, Council on Foreign Relations, National Gallery of Art, Memorial Sloan Kettering Cancer Center, Johns Hopkins Medicine, Lincoln and Kennedy Centers for the Performing Arts, and several great universities, including Chicago, Harvard, Duke, just to name a few. David is extraordinarily generous, not only with his time, but also with his giving. He is one of the original signatories of the Giving Pledge. For those of you who don't know what it is, a group of substantial philanthropists who have committed to giving away at least half of their wealth during their lifetime. David also created patriotic philanthropy by focusing on preserving and sharing American heritage. However, despite all this success and accomplishment, David is probably better known in the world as that witty interviewer with a crooked tie because of his highly successful show on Bloomberg television. Ladies and gentlemen, David is one of the most extraordinary people you will ever meet. He is very knowledgeable on many issues, extremely hardworking, responsive, kind, generous, loyal, but equally humble. And he has a very witty sense of humor. More importantly, he is a dear personal friend, a friend of Turkey, and a friend of the American Turkish Society. He has been to our beautiful country on many occasions and invested substantial time and capital in Turkey. David, welcome.
Thank you very much, Umit, and I want to thank you for that kind, overly generous introduction. I know who to invite to my eulogy because that is better than any eulogy I deserve, but thank you very much, and you are correct. I have been to Turkey many times and have enjoyed being there every time, and many times I've been with you there, and thank you for your hospitality. I would just say that everybody that's listening should lower their expectations. I'm not as good as the introduction is. So don't expect anything as good as Umit's introduction. But I will try now, if I could, to give you a little overview of what's going on in the United States on the economy, politics, and so forth. And then Umit and I will have a conversation where Umit will be in kind of auditioning to replace me on Bloomberg. Bloomberg is always looking for somebody better than me, and he might be good if he does a good job in the interview. So we'll see what happens. So let me give you put it in perspective on what's going on in Washington, to be very serious. Our country went through a stress test, the likes of which we had not had in many, many, many generations, and that was the election. not the election itself, but the aftermath. Clearly, there has always been challenges to elections by people who lose. This is not uncommon in the United States or elsewhere, but we never really had a president of the United States before so violently support the idea that there was fraud. There was no evidence of fraud that could be developed in the 65 law cases that were filed on behalf of the president, but he persisted in that view, and nonetheless, we had to go through this process for a couple of months, which was somewhat embarrassing to the country, which hopes to be a beacon of democracy, but clearly was not in that case. We had the invasion of the Capitol on January the 6th, and I'm sure all of you watched it as I was watching it, were horrified to think that in the United States this could actually happen, but it did. So we are now picking up the pieces. President Trump, who I know reasonably well, is back in Florida. I will talk about him in a moment. Joe Biden, who has not been congratulated by Donald Trump yet, and probably will not be. Donald Trump did not go to the inauguration, which is a rare thing in our country. Joe Biden is somebody that has spent more time trying to become president than anybody in our history, really, because he was elected to the Senate when he was really 29 years old, assumed the position when he was 30 in 1972. And really, he's run for president for quite some time, but probably from the time he was elected in 1972, people thought he might be and actually considered running for president. So he's probably spent, I would say nearly 40 years looking at running for president. He ran twice before and did not get very far. This time, many people said he was too old. As somebody in his 70s now, I'm 71. I don't think anybody in their 70s is too old for anything. I like to think that people in their 70s are at the prime of life. But we had never had a president that age. And as you all may remember, Ronald Reagan left the White House when he was 78 years old, and Joe Biden has come in when he was 78. He came in with the expectation that he would probably govern down the center because he'd been a centrist Democrat. But to get the nomination and to win the election, he really ran to the left of the party a bit. And the left side of the party, the so-called progressive side, supported him and unifiedly supported him. He was able to hold them together. So I'd say as president so far, he's assembled a team of people who probably are a little bit more to the progressive side than the centrist side. There are there's not a lot of business people in the administration. There's not a lot of private equity people in the administration. Maybe you could say that's a good thing, but he's got a lot of people been around the policy world for a long time and probably more on the progressive side. He has worked with these people for a long time. Many of them had worked in the Obama administration. He's when he came into office, he was focused on just two initial major things in the domestic side. One was to get the economy going again, and he had a big stimulus package to do that, nearly $2 trillion. And secondly, he wanted to get the vaccination process underway. He managed to get the stimulus bill through with no Republican votes, unfortunately, from his point of view, and maybe the country's point of view. So we have $2 trillion that's now going back into the economy, but probably, he would have wished to have some Republican votes. It might have changed it if he could have gotten something, maybe had a smaller package, but the Republicans did not want to engage. Secondly, on the vaccination process, I think Donald Trump deserves a lot of credit for getting a vaccine developed, because most vaccines take 4 to 7 years to develop. The polio vaccine took 7 years. Ebola took 4 years, mumps 4 years. This was done in less than a year. So it's pretty staggering what was done. But the vaccine development process worked wonderfully. The distribution process didn't work so well. And President Biden tried to fix that, and he did a pretty good job of it. We now have a problem, though, that there are many people in our country who do not want to be vaccinated. It's become a political matter for some people. Some people say it's really a Democratic thing to have you vaccinated. A lot of Republicans think that Trump doesn't really want you to be vaccinated. Many people don't like vaccines to begin with in anything. It's kind of a very complicated situation. And so to get a so-called herd immunity, you probably need 70% of a population to be vaccinated. And right now we don't have anywhere close to that. So we're still working on it, but the country is very tired of being hibernating in its home. And while Zoom calls are wonderful, they do have the downside that you don't really have the personal connection you normally get when you actually have lunch or dinner or meet with people. So people are basically busting out and ready to go back to work, ready to go to events, ready to go to school. And that's going to begin in the next couple of months or so, whether or not we really have a herd immunity that we would like. At the peak, we were getting roughly 250,000 cases of COVID being reported a day in their country. Now we're getting about 25,000. So it's down by a significant amount, and deaths are down a fair amount too. But I want to put it in context. This was the most dangerous thing to life that's ever seen our country's ever seen. In all the world wars that we have fought in our country, outside this country, we lost fewer people than we lost through COVID. We've lost, close to 600,000 people. It's a staggering amount of money, amount of people, and amount of money too, I should say. It's not a staggering amount of money that was expended to deal with all this problem. And so our country really has suffered a fair bit, as other countries have as well, of course. But we have 5% of the world's population and 25% of the world's deaths. So we were pretty adversely affected. Today, Joe Biden is, I would say, in pretty good control of the administration, in the sense that he's got a very loyal team. They don't leak a lot. He's worked with these people a long time. He is not as much in control of the Congress. He has a 1-vote majority in the Senate, and maybe a 7-vote majority in the House. And he's very nervous about that, as he should be, because you can't get a lot of things done in the Senate unless you have 60 votes. And it's hard to get a lot of things done in the House with that small a majority. The other problem he faces is this. Historically, 2 years after a president is elected, the president usually loses House seats and Senate seats, because the population gets tired of a person after 2 years and say, we're going to vote against them, in effect, by voting against certain members of Congress or their party. Historically, in the first 2 years, the election, 2 years after the presidential election, the House of Representatives loses 30 seats of the president's party. So if that were to happen, the Republicans would gain control of the House. And historically, the party in power, the president's party, loses 2 to 3 seats in the Senate. If that were to happen, the Republicans will control the Senate. If the Republicans control the Senate and the House, then I think a lot of what Joe Biden wants to do will not get done. So he's racing to get things done now, because he realizes that if he loses seats in the House and the Senate, he can't get very much done. So one of his main priorities now in the United States is to get infrastructure passed. We need our infrastructure to be much improved. He's also wants to pay for it with tax cuts, or tax increases that are very, I'd say, opposed by a lot of people who don't really like tax increases. Nobody really likes them. But I think it's going to be difficult for him to get what he wants. He's willing to compromise, but so far he hasn't been able to come up with a deal the Republicans like. I've known Joe Biden for quite some time, and I saw him last week. I went to the White House as the chairman of the Kennedy Center. I take the Kennedy Center honorees every year to see the president, and we went in and spent an hour or so. He was very engaging, very on top of what was going on, and I had a pleasant conversation with him. But he clearly is, recognizing that he has some challenges in terms of getting things through Congress with the slim majorities that he has now, and they could be worse in after the elections. Overseas, his highest priority, number one, I would say, has been to get back into the climate change world. President Trump took us out of the Paris Accords. We're now back in, but this is a high priority. And that's why his very good friend, John Kerry, is now in effect, the ambassador for, or the czar of climate change. The second highest priority is to reestablish close relations with our allies. Many of our allies in Europe and felt that they were, I'd say, not treated as well by President Trump as they might have expected. And so he's trying to convince them that we're back and being a good ally in Europe, particularly with NATO and other kinds of things. Beyond that, I would say he's trying to get the Iranian agreement in some form or another, not the same agreement as before, but something close to that, or something reasonably close to that, that can stop the process of enriching uranium in Iran. Whether that will happen or not, we don't know yet, but there's been some progress. It's slow. He would also like to deal with China in an appropriate way. He hasn't really wanted to engage with China right now, because he doesn't feel he's in a position of strength. So he wants to wait a while, and therefore I don't think you'll see a summit meeting in the near term between the president of the United States and president of China. And the president of China, I think, is okay with that, because he's focusing on the Party Congress this year, focusing on the 100th anniversary of the Communist Party in China. And next year, they're trying to get ready for their Olympics and doing a lot of that work now. Russia is a country that the United States is also focused on. I think the relationship between the United States and Russia will be a little bit more complicated than it was under President Trump, who seemed to be reasonably supportive of many things that President Putin wanted to do. I think we've had some challenges with cyber attacks from Russia. And we've also had some concerns about what they were doing at the Ukrainian border and some other things. Right now, they're supporting the Belarus government as well, has been a challenge as well. I think the president will almost certainly meet with President Putin, probably in Geneva, after the summit meetings, the G8 summit meetings. So on the whole, I think Biden is doing as good a job as he can. In the circumstances, he's only been in office about 120 days, and it's too early to measure it. I would say the economy in the United States is in pretty good shape because of the stimulus. We are growing at a fairly good rate. I suspect this year will grow somewhere between 6 and 8%, which is pretty good. Of course, we coming from a low base. Inflation is now something people are worried about. We had a quarterly number of over 4%, which is twice what we've normally been having in recent years. Our inflation for the last 25 years have been less than 2% or so per annum. So inflation is a concern to people, but it's not as high as it was when I was in government, when we had double-digit inflation. I don't think we're going to see that again. I also think that the interest rates are likely to stay low for quite some time. Jay Powell, who used to work at Carlyle, is now the chairman of the Fed. And while we don't have any special insights or knowledge, it's my expectation that he's likely to keep interest rates about where they are now, at least through this year. And he said maybe through next year if inflation doesn't become a big problem. I think in terms of the investment environment, it's been pretty good for private equity. Private equity firms have been able to do things over Zoom that we didn't expect we'd be able to do. So funds are being raised, deals are being done, exits are occurring. And I think it's actually the private equity world is as strong as almost any time I've seen it. I do think that the investment environment is not cheap. Nothing is cheap anymore, but interest rates are low. And so therefore, I think people are willing to pay slightly higher prices. And given the fact that alternatives to private equity don't get as high a rate of return, people are willing to take somewhat lower rates of return in private equity. I would say around the rest of the world, private equity is doing reasonably well also. Clearly, the biggest things that the president of the United States has to worry about is not private equity. But I think it's probably whether or not he can convince Congress to go along with what his programs are. That's a big challenge. And also whether he can find a way to kind of deal with China and Russia in an appropriate way that I think solves some problems but doesn't create new problems. Let me just conclude by saying that there are a number of things I want all of you to think about as you go forward. What are the things you should be watching for in the news and determine where the world's going? One is whether the left side of the Democratic Party begins to depart from Biden. Biden will have to make some compromises soon. So far, the left side of the party has been relatively quiet, but I think they're beginning to think that maybe the president is going to negotiate something they don't like. So whether he can hold the party together is a big issue for him. Second is whether he can really react to a foreign policy crisis with the leadership that people want a president of the United States to have. The only foreign policy crisis he's really had so far, you could argue, is what's going on in Israel and the Palestinian area, Gaza. He did work behind the scenes to get a ceasefire, which now seems to be in place, but clearly learned a lot about the diminished support, I would say, for what Israel wanted to do in the United States compared to previous years, and I would say around the world as well. So whether the president acts decisively in a foreign policy crisis is something everybody's going to watch for. Next thing everybody should watch for is whether the Republicans are willing to divorce themselves from Donald Trump. At the moment, Donald Trump is still very influential. Members of the House and members of the Senate who are Republican are unwilling to criticize him by and large, with a few exceptions. And the reason for that is he has a large reservoir of support in the Republican Party. 70% of Republicans say that they believe the election was stolen. Well, if 70% of Republicans believe the election is stolen, that's going to be felt by members of Congress. So they're very, very leery, with a few exceptions, of criticizing him. Whether they break away from Trump, we don't know. And also, we don't know whether he's going to run again. Donald Trump would be the same age as Joe Biden is now if he ran in 3.5 years. I wouldn't say I would rule it out. I would say it may not be realistic to think that he would come back in that way, but nothing is impossible. Next is whether the stock market is going to have a correction. Stock market's been terrific for the last year or so. Obviously, it went down for a bit during COVID, but right now the stock market's at pretty good levels. Whether there's a correction, nobody knows. I wouldn't be shocked if there was some correction, but nobody really knows, and I can't say I'm predicting one. Another issue that people should watch is whether the big technology companies, Google, Facebook, Amazon, Microsoft, and others, begin to have more regulatory action against them in Europe and in the United States, because they are becoming very powerful in the view of some people, and there could be some regulatory action or legislative action. I don't think anything is imminent, but it's something to watch for. Next is whether Joe Biden is able to stay, politically strong and also give any hints about what he's going to do in 3.5 years. He has said he intends to run for re-election. He would be 82. Possible. It can happen. There have been older people than that running countries, but we'll just have to see how that goes and how effective his vice president is, Vice President Harris, who I did interview last week, and she's obviously very, very knowledgeable about what's going on in the administration. Next is whether China and Russia will try to test the resolve of Joe Biden. It's clear that China and Russia would like to see how strong Biden is going to be in reacting to some of the things they're going to do, and they may well test him. I would say finally, we'll look at what's happening with Donald Trump and his legal situation. There are some investigations going on. If they were to be unfavorable to him, it may make it difficult for him to be that politically effective. On the other hand, some of his supporters would not be bothered by any legal thing that could probably happen to him. So those are some of the things that I'm watching, and I hope some of you will watch. And Umit, why don't we just go to some questions you might have about some of the things I said, or anything else?
Well, David, regarding Biden's health, what are the economic and political risks that you can anticipate if something happens to him?
Joe Biden is 78 years old. He's I saw him just, as I said, last week. I wish I was as good shape as he is physically. He exercises every day. He exercises every day, and he's in great shape physically. No 78-year-old person is as good a shape as a 58-year-old person. I'm 71. I'm not as good shape as when I was 61 or 51. So there's no doubt the aging process, but generally I would say my observation when I talked to him was he's in pretty good shape, but you never know. When people are in their 70s, things can happen. In 1949, 22% of the people who are deceased now, 22%. And obviously every year that will increase. So you just can't predict. As all of you who are in your mid to late 70s know, or have parents who are in your mid to late 70s, things can happen that are just unanticipated sometimes. So I would say right now he's got great medical treatment. He exercises. He seems to be in really good shape to me. But I don't see anything unforeseen happening. But you don't know. He's had some health issues before. He had 2 brain aneurysm operations years ago, from which he seems to have recovered quite nicely. He has a vice president who's I would say younger. And she's in pretty good shape, I would say. And clearly, if she had to, she could become president. But I don't think anybody's seeing that happening anytime soon. I think people expect that he will get through the full term for sure. But no health problems are anticipated that I know of right now.
Okay. You very eloquently described his focus on high priority items, especially based on the current political arithmetic in the Congress and the Senate. With the midterm elections, what are your expectations for the outcome? Republicans perhaps winning some more seats and derailing this consolidation that has taken place?
Well, since 1970, there's been only one time where an incumbent president of the United States in the election immediately after he was elected won seats. That was George W. Bush after the events of 9/11. He was pretty popular in those first 2 years, and his party won seats in the House and the Senate. But other than that, the incumbent president always loses seats in the House and the Senate, and therefore it's likely to be expected that will happen. Now, right now, Biden's popularity is much higher than Donald Trump's ever was. But one of the issues you have to remember is that in presidential elections, we have, let's say, 60-some%, 62, 63% of the eligible voters actually voting, 62 or 63%. In a midterm election, you might get 20 or 30% to vote. So you have the people who are going to vote are the hardcore people. And a lot of people, let's say, that might support Donald Trump and not like Joe Biden are probably, hardcore voters, and they're going to get out to vote.
As you know, relations between our two countries have been tense for quite some time, arguably at all-time low. There are reasons for that, but primarily the differences in Syria, the Kurdish involvement in Syria, Iran, the Gulen movement, the clerk in Pennsylvania, air defense systems, F-35 program, Armenia issue, you name it. How does Turkey look from Washington today? What is the current sentiment?
Well, I would say President Trump's administration had some problems with what Turkey did, though I think President Trump felt simpatico in certain ways at certain times with your president, though he did have some disagreements with him. But I think he, sometimes he listened to what he recommended. For example, when he recommended we pull American troops out of Syria, President Trump went along with that for a while. And so I would think they had a reasonably good relationship, relatively speaking. I would say that President Biden does not have as close a relationship. I don't know if I assume, is he called, he talked to yet the president of Turkey? I'm not sure if he's, I know he didn't call him for a while, but I don't know, I haven't kept up. Has he talked to him yet?
The call finally took place, and they've agreed to meet soon at the NATO summit.
Okay. For a number of reasons, the policies of the Turkish president have not been, let's say, consistent with some of the policies of President Biden. We have a strong relationship with Turkey and the Turkish people, but there's been some challenges, obviously, between some of the policies of President Erdogan and the current administration. Maybe that can be resolved. The Armenian statement was something that when I worked in the White House, 40 years ago, that was a subject of dispute. And every administration is lobbied a bit to make a statement like that. And up until President Biden made that statement, no administration actually did what was said in that statement. I suspect I see that as a bit of a shot across the bow. And it's in fact saying, look, you've got to get your act together in Turkey if you really want to be friendly with Americans. But we do have close relationships. We are all members of NATO. And I suspect we share many common values. And I know the Turkish people are ones that have values that are shared by Americans as well. But there has been some challenges. Hopefully, when they meet, maybe some of the problems can be ameliorated. But usually, you don't solve all your problems with a summit meeting. They can address some things. So I'm hopeful. And obviously, the American Turkish Society, I think, is hopeful that we can improve relations. But it's going to take time. It doesn't happen overnight.
What can we do more to improve these relationships as business community, civil society, NGOs, or basically we have to let the political leaders to really work this through?
Well, it's hard for me to give advice to people how to deal with Turkey because I'm not as familiar, obviously, as everybody on this call is. In the United States, what we typically do, and sometimes as we say to the business community, you have a lot of influence, you control a lot of jobs, exercise your influence, talk to members of Congress, talk to the president, talk to the cabinet officers, and try to see whether you can make some headway. I don't know whether that kind of influence is possible in your system. And so I just don't know whether the business community can have that kind of influence when there's so many other existential issues that the president of Turkey is worried about. But I would say that to the extent that there is business relationships between Turkey and the United States, it can only be a plus. So to the extent that Americans invest in Turkey, Turkish business leaders and companies invest in the United States, it strengthens the ties and I think makes it clear to the political leaders that this is a relationship that is strong. And as you know, the United States has had a strong relationship with Turkey for ever since the Ottoman Empire, really. And so we've been very close to Turkey in many different ways for a long time.
David, you get to see a lot of investment opportunities at Carlyle and at your personal family investment office. What are the best investment opportunities today?
Well, clearly over the last year or so, technology, and particularly technology related to financial services, healthcare, have done quite well. Growth capital related investments in the United States and China have done quite well. In Europe, I would say probably also. right now, private equity and private investments seem to be outperforming public equity, but public equities have done also quite nicely. I think the biggest issue you have to worry about is how much longer can this continue? Because it's been going on for some time and people have done quite well. I think people should be cautious, don't take undue risks. As I like to remind people, the most important thing if you have money is not to lose what you have. And so don't take undue risk. The second principle is diversification. And a third principle is try to be realistic in your expectations of rates of return. Don't try to get heroic rates of return and taking undue risk to get that. I am starting a new TV show on Bloomberg next month, which will be about the art of investing. I'll be interviewing the best investors in the world and hearing their tips about it. And, but generally the rules that I just articulated are probably the ones that people will talk about, which is to not take undue risks, make sure you know what you're doing, do your research, and diversify. But most importantly, don't lose what you already have.
Maybe I'm going to put you on the spot a bit. What is your asset allocation from your personal perspective when you look at your portfolio?
Well, because I'm a gigantic investor in everything Carlyle does, I have a large buyout portfolio around the world. So in my family office, in things that are not inconsistent with Carlyle, I've been doing a lot in the growth capital area because Carlyle hasn't had as big a business there, though we do have that. So a lot in growth capital, a lot in technology. I have done a lot in real estate because I think it's always a pretty, if you know what you're doing, pretty safe area to invest in, and doing things relating to digital transformation and so forth. I have done a number of things relating to new technologies and new kinds of areas and things that are different. And because I'm investing my own money, I don't have quite the fiduciary responsibility that I do when I'm involved with investing other people's money. So I'm willing to take slightly higher risks for my money. And, in the end, I'm pretty happy with where things have gone. But remember, in the last year or so, you didn't have to be an investment genius to make a fair amount of money because the markets have been fairly ebullient, I would say, almost everywhere.
Private equity has evolved over the last 20, 30 years, and you were in the middle of all these changes. Can you share your observations, how it has evolved, and the development of the investor base, the sophistication, etc.?
Well, private equity, when I got involved at getting started with Carlyle in 1987, the phrase private equity didn't even exist. They were called buyouts and so forth. Today, the investment environment is such that people recognize that if you are not investing in alternatives, which would include venture capital, buyouts, growth capital, real estate, and hedge fund related kinds of investments, you probably are not really diversifying adequately. So most people that I know have a reasonable amount in their so-called alternative space. And I think the reason that the industry has grown is really, I think, three reasons. One, there's been an appetite for higher rates of return in a low interest rate environment, and private equity has been able to offer higher rates of return. Secondly, private equity has outperformed and private investments have outperformed public investments over the last 10, 15, 20, 30 years, almost all years, not always, but almost all years. And third, I think the private equity people have a business model which makes it likely that things are going to work out reasonably well because they are pretty hands-on. They're putting their own money alongside the investors. They have to get a certain preferred return before they make any money. I think the terms are reasonably fair these days, and it's been a global business. Now, it may not continue this way forever, but it's worked out reasonably well. And the industry is now one where I would say it's not considered alternative, but it's really mainstream. Almost anybody that's an investor will have some money in something that used to be called alternative because it's just not just equities and bonds anymore that people feel is appropriate to have their money invested in. And I don't know whether I'm in good shape or bad shape, but I have 3 children, and none of them are poets or artists or playwrights or musicians. They're all in what I call, and you referred to, the highest calling of mankind. All of my children are in private equity. So I either did something right or something wrong. I don't know. We'll find out in time.
We have seen some longer dated private equity funds. Why do you think that has emerged?
Private equity's business model over the years was more or less to hold something for 2 or 3 years, and then maybe 4 years, average is 4 years or so, and then sell it back, sell the asset, and then give the money back. When you give the money back to people, you do have two issues. One is they have to pay taxes typically, and two, there are what do you do with the money you get back? So if it's great for me to say I have a 25% rate of return for 3 years for you, but if I give you money back in 3 years and you have it in cash for a year or two, your blended overall IRR on that money is not 25%. So some people would say, hold it longer. I don't need 25% over 3 years. Give me 20% over 6 years or 7 years. Hold it for 8 years. Because if you can get with no taxes I have to pay and I'm compounding tax-free, I would say many people like that. Now, for people that need the cash back for their lifestyle or feed certain businesses or other activities, that's one thing. But if you're a gigantic pension fund or you have enormous amounts of cash and you don't need it for your day-to-day activities, if you can get 15% a year over 6, 7, 8, 9 years, why not just do that and not have to deal with taxes and other transaction costs? So that's why it's been appealing to people.
There is one phenomena that has grabbed a lot of attention. That's the emergence of family investment offices, especially in private. Please share your ones and whether they'll become even more potent competitors to private equity shops.
Yes, in the private equity world, when it first started, most of the money came from a limited number of high net worth families, really wealthy families, the Rockefellers and so forth. Then in 1978, the United States government said it was pension funds in the United States to invest in private equity wasn't considered imprudent. And then, so they became the gigantic investor, the largest investor, the US public pension funds. But then the sovereign wealth funds came along, and they were even bigger than the US public pension funds, and they became a gigantic investor, and they still are they could put out more money than anybody else. But what's happened over the last 20 years or so in the United States and around the world is that a lot of families have become very, very wealthy, and they decided to set up family offices, which is to say they do it for a couple of reasons. Some of family offices pay bills, they manage real estate, they do philanthropy, but they also do investment. In my case, I set up a family office to do just investing and only really in private equity, which is the area I know. I think it's a big source of capital, and I think one of the advantages for people who are in family offices, they generally can move pretty quickly. So if you're trying to raise money, typically you'll raise money more quickly from family offices because they don't tend to have all the gatekeepers and other consultants and so forth that the pension funds often have. So if you're trying to raise money in a relatively short period of time, family offices are likely to move more quickly, and they're going to grow at a pretty good rate. So more and more people are setting up family offices in the United States, and that's a major source of capital now. And for a number of years, I didn't have one. People would say, David, do you have a family office? I felt I didn't have one. I felt I got what I call family office envy. I kind of feeling like I wasn't a real person if I didn't have a family office. So I set up my own family office. I wish I had done so earlier, because I now have my children involved with it, and also it's done quite well for our family.
I understand that our dear friend Wael Bayazid wants to speak. John said, will you allow Wael, who happens to be a director of the American Turkish Society, and I understand he works for you.
Well, I guess you've lowered the standards for being a director of the American Turkish Society, or at least you made an exception in that case. But Wael has worked for Carlyle for 20 some years, did a spectacular job, and he's convinced me that he is a member of a direct descendant of the Prophet Muhammad, he told me. I think that's true. Is that right?
While you are on mute, probably.
Wael
I'm
is,
sorry. Can you hear me?
on mute. Wael is never on mute.
No, well, I didn't mean to ask any question. I'm just delighted to listen to David, as I have for a little over 25 years. So thank you for your insights, and I really appreciate having you talk to us.
Well, thank you, Weil. Weil hosted me. I was in Florida not too long ago, and Weil hosted me for an event down there and had dinner at with him and his lovely wife, and we had a great time. And I look forward to going back to Turkey sometimes, I hope, with Weil, so we can do some of the things we did before. Weil and I like to swim across the Bosphorus whenever we had spare time, and it just took about a half hour. Weil took a little bit longer, but I did in a half hour. Weil took about 6 hours to get across. But
That's great. David, there are two issues, somewhat controversial in the financial world: digital currencies and SPACs.
yes.
What are your thoughts on those two?
Well, I was on Squawk Box, a television show in the United States recently, and I talked about it, and it got more attention than I expected. Here's my view. Digital currencies is not something that I took seriously at the beginning. I'm older. I don't move as quickly in terms of adapting new ideas. I'm often what I call a last adopter. You know, I just gave up my BlackBerry recently. I'm always the last person to adopt new things. So I didn't take it that seriously, but now I realize that it filled a need that some people find to basically not be so dependent on governments and government currency, which often becomes inflated and so forth. So some people also like the idea there's a certain amount of privacy or secrecy, you could say, with owning digital currencies. So I think had the governments of around the world stopped digital currencies when they first started 6, 7, 8, 9 years ago, maybe they could have done so. I think the genie is out of the bottle now, and there's going to be an infinite number of digital currencies. And I also would say that the government of the United States and the government of China, probably within 10 years, will have digital currencies themselves. So you could say, well, if I have a digital currency backed by the United States government, fine, but I might like to have a digital currency not backed by the United States government. And so I think they're here to stay. As I said on the TV show, I have not bought any of this myself, but I have invested in companies that help facilitate the trading of them and things relating to it. So I do think it's a growth area. Now, it fluctuates a lot. If you can't stand the fluctuations, don't get in this area. This is not for the faint of heart. If you want not and have no fluctuations, buy very standard AAA corporate bonds or something. But if you can take some fluctuations for a small percentage of your portfolio, I think it's okay. And it's really it's in effect another gold substitute. Gold is something that people put in their portfolio because they don't trust currencies. Well, digital currency or cryptocurrencies is a thing for people who also don't trust government currencies and they want something a little bit different. It's really like gold in many ways. It doesn't have the ability to be translated into metal the way gold does. Gold has some utility, but I still think it fills that same purpose in the investment world. And so I think it's here to stay.
On SPACs,
On
as
SPACs.
opposed to an alternative to the IPOs, most people, myself included, we think that it's a good alternative to private equity. So do you expect any competition from SPACs?
Well, for those who aren't familiar with it, SPACs means Special Purpose Acquisition Company. And essentially what it is a vehicle that enables you, the investor, to say that you will give money, in effect, a blank check to somebody for 2 years, or up to 2 years, to find a company to buy. And when they buy that company, it's automatically public because the SPAC is public. The appeal of SPACs to the investor who puts money in is that it's thought that you're getting an interest rate return for 2 years, and then you can decide if you want to go into the company they're buying. So it's a way to get maybe a good price on a deal. Secondly, for the people that are doing the SPAC deals, that are selling the SPACs, it's a way to go public without the often year-long process you have to use through the SEC. Like many things that happen quickly and where there's a lot of money involved, there's a lot of greed involved and excesses occur. So there have been some excesses. Many of the SPACs that went public with companies are below the IPO price. That means people have lost money on paper to some extent. So I would say there's an excess, and people it'll have to find its level. It's not going away, but I don't think it's going to take over the entire world of private investment. It fills a niche, but I wouldn't say it's going to be as gigantic in the future as it probably has been over the last couple months.
David, throughout your career, you've met a lot of successful CEOs. You invested in, you bought companies, and a lot of CEOs work for you. What are the main characteristics of great CEOs and great leaders?
Well, of course, luck is a factor, and you always have to make your own luck. But the skills that I think are great leaders and great CEOs have are: one, they have a vision of where they want to go. Two, they're very persistent. Three, they learn how to get along with other people and motivate other people to want to follow them. You can't be a leader without followers. You have to motivate people to follow you. Four, they are people who are generally people who have a reasonably good work ethic and a reasonably good intelligence. You don't need to be a genius. You don't need to be the hardest working person in the world, but a good work ethic and reasonable intelligence often it helps. And I think you also have a curious mind. You have to be interested in new ideas because you're always looking for the new, and you have to be willing to be open to new ideas. I also think some humility helps. Obviously, we've known a lot of leaders who are arrogant, but the ones that I think are the best ones that tend to have some humility and recognize they had some luck along the way. I also think a high degree of ethics is very important, and a willingness to share the credit with other people is important. So those are the kind of things that I think you often see in great CEOs and great leaders.
Who impresses the most among the current business leaders in America or globally for that matter?
Well, I just read that Bernard Arnault is now the richest man in the world, and I've known him for a while. And look what he did. He took a kind of a small fashion company initially and built it into the biggest company of its type in the world. So very impressive in what he did. I've known Jeff Bezos for a long time, and you have to say, look what he did. He took a small company, and it didn't go public until I think 1996, and built it into basically one of the biggest companies in the world and one of the most ubiquitous companies in the world. You have to admire him. Facebook, Mark Zuckerberg is a very young person, but he built a company that now has 2.5 billion customers in effect around the world, and it became like a utility. So quite impressive in what he did. Tim Cook was not thought to be Steve Jobs, but look what he did. Steve Jobs died when the company had a market value of about 350 billion. Now it's about 2 trillion. Tim Cook deserves a lot of credit for what he's done, in my view. And then I admire people that built these large companies in China. Jack Ma built an incredible company, 2 different companies, Alibaba and Ant Financial. And while Ant has not yet gone public, it's a pretty impressive company, and I think it's and we've invested in. I should disclose, but there are a lot of business people I admire. I just wish that I had held on to my Amazon stock when I had it early on, or I wish that I had given money to Mark Zuckerberg when he was at Harvard, but I turned it down.
Although you will be in your new show interviewing some great investors, you already have interviewed a lot of great investors. What does it take to become a real good investor based on your experience with the people you have talked to, you work with?
Well, what it takes is, one, you have to know what you're trying to get out of the investment. You should have realistic expectations of what the rate of return is. 2, you should make your own assessment of what the value is of what you're investing in is. 3, you should rely on people that are experts. 4, you should diversify. Don't make undue bets. 6, I would say, not try to prove you're a genius in the investment world because you were good at something else. Because you were good at manufacturing widgets and you made a fortune doesn't mean you'll be great at investing. It's an art and a science, just like many other things. But I would say generally diversification, realistic expectations, doing your homework, and relying on people who actually know what they're doing to help you.
Okay. Basically, there is so much focus on technology disruption, and for those of us who come from the 80s, 90s, Is investing in the old Rust Belt industries over, or there are still opportunities there?
Well, they don't have the same sex appeal that investing in the newest technology. Everybody, when advertising agencies are trying to figure out how to sell a product, the word that they find that is the most useful is to say new. Something is new. People like new. Nobody likes old. So it's obviously sexier to invest in the newest technology, the newest software, the newest device that people are going to have to make themselves happier or more successful, whatever it might be. Investing in the old things, as many value investors do, Warren Buffett being the most famous of them, is also a good way to make money. Because when everybody's going in one direction, if you go in another direction, you're probably going to do reasonably well if you're patient and you do your homework. So I think there are plenty of so-called Rust Belt opportunities that are available now, the things that people are otherwise not paying as much attention to. When people are paying a lot of attention, prices go up. People are not paying a lot of attention, prices go down. That's where you make your money. You make your money by buying things at a reasonable price.
There is a lot of cash available on the sidelines, and there's a lot of cash, dry powder within the private equity community. Do you think the private equity investments will outperform public investments going forward as they have done in the past? Should we expect lower returns going forward? If so, what would be the expected range for you?
Well, over the last 20 and 30 years, private equity has outperformed public markets with very few exceptions. And the reason is, I think you have alignment between the person doing the deals and the people who are investing. In other words, the people who are doing the deals are putting their own money at risk, and they really spend a lot of time trying to fix the value, to fix the companies they invest in. Public equities are more cyclical and fluctuate a bit more. And I would say they have the advantage that you're more liquid, but they don't know that they will outperform private equity. I suspect the gap, though, between public equities and private equity will narrow, because as more and more money goes into private equity, it just inevitably will push returns down a bit as prices are pushed up. So I suspect the gap has been historically about 300 basis points between public market averages and private market averages. And it could narrow a bit, but everybody wants to invest in not an average private equity firm, but a top quartile one. And if you're in a top quartile one, you might outperform public market averages by 1,500 basis points to 2,000 basis points. And that's what everybody wants to do. I suspect that gap will narrow a bit, but I do think that private equity is, where I put in all my money is invested in various private equity kinds of things. And so I'm not a public equity person, haven't historically been, and I'm pretty happy with what I'm doing.
Because of sizable success stories in private equity, do you expect new regulation going forward, especially from a Democratic administration?
Well, when anybody is making too much money or seeming like they have too much fun, usually governments come along and say, you're having too much fun, you're making too much money. That actually hasn't happened right now. Usually what happens is when there's big losses or when people lose a lot of money, that's when members of Congress tend to come in and get involved. So the private equity world has done quite well recently. And I would say that I don't really see a lot of regulation hurting private equity in the foreseeable future. President Biden has proposed changing the carried interest taxation method, which is a complicated way that people in private equity get taxed. I don't know whether that'll pass or not. That's been around for a long time, but I don't really think if it does pass, it will dramatically change the private equity world, in my view. But other than that, I don't see a lot of regulation coming right now. Now, if there's big losses and big deals go south, that's another issue, but I don't see that in the near future.
How did COVID affect origination, due diligence, deal making, and managing the team that is global?
Managing a global team is a 24-hour business, because the sun never sets on your team at some point. In the end, the best thing to do is to hire good people locally. We didn't take Yankees and send them around the world. Typically, we would hire local people who knew the local customs and business practices. And then you have to get people who you think are good enough so you trust their judgment. If you're going to second guess everybody and fly spec everything you're doing, you probably have the wrong people. But you have to delegate, and you have to hire good people and incent them by paying them well. And that's generally what we've done at Carlyle. We have a pretty good group of people that have stayed with us for a long time. And I think good private equity firms generally hold on to their people for quite some time.
Okay. David, we are grateful for your time and your support. We want to thank you profusely. And we would love to in Turkey again soon, and at one of our events, possibly in New York or in Miami.
If you invite me, I'll be there, okay?
You are always invited. Thank you so
Thanks a lot.
much, and
Right.
we're grateful for your time.
Thank you. Bye.
Bye-bye.